So we came to Los Angeles, and the reason we're doing it from here is because of the man on my left, not because he asked for it, but because all of us wanted to do it with Charlie in here in Los Angeles. So I'll introduce the three vice chairmen of Berkshire in a minute. I'll show you the first quarter earnings. We won't take much time on that. I'll have one or two very short lessons for perhaps the new investors who are not necessarily in Berkshire Hathaway, but people who have entered the stock market in the last year. And I think there have been a record number that have entered the stock market. I'll have a couple of little examples for them, and then we'll swing into a Q&A led by Becky Quick, who's looked at thousands of questions that have been submitted to her. But more can be submitted during this meeting, and we will put up on camera from time to time the way you can communicate directly with her if you want to send questions in during the meeting. She got flooded with them last time, and she miraculously keeps sorting them out. And so feel free to send in a question, and we will have a question period for about 3.5 hours. And then we will finally have the annual meeting, which won't take long at the end. So with that, I would like to first introduce the three vice chairmen of Berkshire Hathaway. I'll tell you just a little bit about them, and then I'll have a mild surprise for you at the end, perhaps. On my left is Charlie Munger, and I met Charlie 62 years ago. He was practicing law in Los Angeles. He was building a house at that time a few miles from here, and 62 years later, he's still living in the same house. Now, that was kind of interesting because I was buying a house just a few months before, 62 years ago, and I'm still living in the same house. So you've got a couple of fairly peculiar guys, just to start with, in terms of their love affair with their homes. And Charlie and I hit it off immediately, and I would say he's probably the vice chairman in charge of culture, among other things. But if I ever want to get questions about where true north is, I talk to Charlie, and he has been an enormous help. He's done it with a lot fewer hours and a lot less talking and everything than I have, but he's contributed in an incredible way to Berkshire. So Charlie's been out here in Los Angeles for 60 plus years. On my right, your left, I have the vice chairman in charge of everything except insurance and investments, Greg Abel. Greg was born and raised in Edmonton, Alberta. He's Canadian, plays hockey. His 8-year-old plays hockey. And he came to the United States sometime after he graduated from college in Canada. And he is in charge of a business which has well over $150 billion in sales and employs more than 250,000, probably 275,000 people, and does a much better job at doing that than I was doing previously. And on my far left, you're right. We have Ajit Jain, and Ajit was born and raised in India, and graduated from college there. And I met Ajit on a Saturday in 1986, and I'd been in the insurance business. Berkshire had been in the insurance business for quite a while. And I was kind of stumbling around in various ways. And Ajit came to the office, and Saturday I was opening the mail. And I said, how much do you know about insurance? And he said, nothing. And I said, well, nobody's perfect, and let's talk about it some. And by the end of the morning, I knew I had somebody that was going to build a great insurance business. And starting from that point, this improbable little company in Omaha became the largest property casualty company in the world in terms of net worth. It writes risks occasionally in a 24-hour period that other companies simply couldn't take on themselves. They'd have to assemble other people. It would take them a long time to come to a decision. That was very important at various times in the past. It's not so important now. But he's built the world's leading property casualty insurance company. So here we have Charlie from L.A., 60-some years. We've got Greg from Canada. We've got Ajit from India. And the one thing in common that these three fellows have, aside from working for Berkshire and doing a sensational job, the one thing in common is that at one time or another, for some extended period, they lived within a mile of me in Omaha, Nebraska. And Charlie, in 1934, moved about 100 yards away from where I now live and went through high school, eventually went in the service, and knows the neighborhood as well as I do. Went to the same grade school my kids went to and so on. Greg spent significant time living in Omaha, lived about 5 or 6 blocks from me, and now lives in Des Moines. And Ajit was in Omaha, about a mile away for a couple of years. So we started in very different places and sort of came together and now go our separate ways, but it's all worked very well. I would, and you'll hear from him during this meeting, I urge you to send questions if you're saying you can direct them to me or you can direct them to any one of the other three, and it will be a big relief to me if you direct a fair number to the other people. So we, this morning, as we always do it on Saturday, we published our 10Q, which gave the quarterly earnings. It's up on our website, BerkshireHathaway.com. And it's very interesting. We put these out on Saturday morning. That's not because the media likes us to do it that way. It's not because the analysts like to do it that way. But we want to give you the maximum time to digest an awful lot of information that's in that 10Q. It can't be summarized in a perfect way. We'll give you some summary figures, but if you're really a student of the place, and most of our investors buy because they simply have faith in these other three fellows to do a good job, and it's not a misplaced faith. But if you really enjoy going into the details and you want to understand the nuts and bolts of Berkshire Hathaway's various operations, you should read that 10Q, and it'll take you. It may take you a couple of hours. I mean, it's not a small investment of time, but it's got a lot of information about all our various businesses. And for those of you who are business students of a sort, I recommend you go to it. The summary figures you see here, which are the ones we put in our press release, show kind of an interesting pair of numbers. I mean, down there at the bottom, we have last year. When you see those brackets around numbers, you got to start worrying. And first quarter, we actually showed a loss of almost $50 billion. I never thought I'd ever see a figure like that. And I was thinking back. I was trying to remember whether I'd gone on vacation during that quarter and turned things over to the other guys or what. But I checked the calendar, and that was me. that figure this year is a positive figure of 11.7 billion, and neither figure is very meaningful in itself. The Accounting Standards Board a few years ago, for many years, unrealized gains or losses of a company like Berkshire were made adjustments to the net worth of Berkshire, but they did not run through earnings. And a few years ago, the rule was changed so that every time the stocks go up or down, it goes through our earnings account. So in the first quarter of last year, when stocks went down a lot, we had a huge sum of unrealized. Well, it was a reduction of unrealized gains largely. And when you start saying things like that, you start losing people. But that item was a mild plus this year. But if we reported earnings daily, you would see earnings one day of $3 billion, next day of minus $2 billion, and it's an accounting treatment that we don't think is particularly appropriate, but it's required, and we explain very carefully, both in our press releases, or we try to explain, and I try to write in my letter and explain why I don't think that's the way to look at Berkshire. We think over time that we will have investment gains for reasons I lay out in my letter. Over a period of time, the companies we own stock in retain earnings, and they use those reinvested earnings usually to our benefit, and that shows up in capital gains someday. But reported earnings for a company that has a lot of common stocks, marketable stocks like ours, you don't want to look at that final line, and you do want to look at the operating earnings line. Now, I would say that if you had taken the first 2 months of last year and compared to the first 2 months of this year, those figures would have been quite comparable. But of course, in March of 2020, the economy was shut down in effect. I mean, it was a self-induced recession, and an abrupt one, very abrupt. And so the economy went off a cliff in March. It was resurrected in an extraordinarily effective way by Federal Reserve action and later on the fiscal front by Congress, and we'll get into that later. But the figure you see that the difference was March, basically, the two. And our businesses have done, we'll get into more specifics later, but our business has done really quite well. This has been a very unusual recession in that it's been localized as to industry to an extraordinary extent. And right now, business is really very good in a great many segments of the economy, which we'll talk about later. But there's still problems if you're in the few types of business that have really been decimated, such as international air travel or something of the sort. So with that, we'll go back to the figures later on, but perhaps in some of the questions. I would like to just go over two items that I would like particularly new entrants to the stock market to ponder just a bit before they try and do 30 or 40 trades a day in order to profit from what looks like a very easy game.